Qualcomm Stock, ticker symbol QCOM. This stock is down roughly 26% year to date and has a PE ratio of just 14, which is very low for a tech company. QCOM stock is loved by the investor for the future growth, but also because of the dividends, which are sitting at 2.2%. Since the stock is down roughly 26% year to date, and with all the things that are happening right now in the market, I think it's the perfect time to do a fundamental analysis. In this video, I will show you everything you need to know about Qualcomm stock. I will show you what they do, and I will show you my fundamental analysis to see if Qualcomm stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Qualcomm do? Qualcomm is enabling a world where everyone and everything can be intelligently connected. You interact with products and technologies made possible by Qualcomm every day, including 5G enabled smartphones, smarter vehicles and cities, and the technology behind the smart connected factories that manufactured your latest purchase. When checking the revenue, we see that the handsets is by far the biggest segment, with 6.3 billion in revenue. This segment is on track to grow 50% year over year. Second biggest segment is the Internet of Things, with also a 50% year over year revenue growth across each consumer, edge networking and industrial sub-segment. This is the fastest growing revenue stream. Next up is the RF front-end segment with 1.2 billion, which is expected to grow in high amounts in the future because of all the 5G network and so on. Last segment, and also the smallest segment, is the automotive, at only 340 million. Right now there's a design win pipeline of 60 billion for the Snapdragon digital chassis technology. I want to highlight a few key announcements, which I think are very important for Qualcomm. So first of all, the Snapdragon 8 Generation 1 powers 75% of the Galaxy S22 series, which is very impressive. Qualcomm extends connectivity leadership with the world's first and fastest Wi-Fi 7 commercial solution. Multi-year agreement to be deployed across 14 iconic Stellantis brands. Creating a scalable platform for automated driving, Qualcomm, BMW Group and Arriver to form a long-lasting strategic cooperation for joint development of automatic driving software solutions, empowering developers and companies as they push the boundaries of what's possible. Qualcomm launches 100 million Snapdragon TM Metaverse Fund. The last thing I want to highlight is that it's expected that companies like Qualcomm will become more and more important in the future, since products like this have a high demand. In this chart we see the semiconductor sales worldwide of all companies together, from 2012 to 2021 by month. It's going up and it's expected to grow even more. So this is something that's very important for me. Qualcomm is one of the market leaders and the industry itself is growing in high amounts. So now that we know everything about Qualcomm, it's time to check the historical stock price performance versus some competitors. I decided to include the S&P 500, AMD, Texas Instruments, ticker symbol TXN, Intel, ticker symbol EMTC, and Broadcom, ticker symbol EVGO. On the 5-year chart we see that Qualcomm has a 190% return, the S&P 500 a 80% return, AMD a 700+% return, TXN 140% return, Intel almost at 40%, and FGO almost 200%. So you beat in the S&P 500 quite easily with owning Qualcomm stock in the past 5 years. On the 1-year chart we see that all stocks are down except for Qualcomm, AMD and EVGO. Again, you beat in the S&P 500 quite easily on the 1-year chart. On the 1-month chart we see that again all stocks are down except for Qualcomm and EVGO. But as I told in the beginning of this video, Qualcomm is down roughly 26% year to date. So I'm really interested in the fundamentals of this company to see if they are a buy at current prices. Qualcomm is a 157 billion market cap company with a PE ratio of just 14. And this is very low for a tech company, but also very low if you compare them to some other semiconductors. But more on that later in this video, so make sure to watch until the end. QCOM has an operating margin of almost 33% and a profit margin of 28%, which is very nice. Companies like QCOM do have a higher margin in general, so that's comforting me a lot. Return on assets is sitting at 20% and return on equity is sitting at 107%. Both are fine in my opinion. You want this number to be above 10%. The 12 trailing month revenue is sitting at 39 billion and they have a 40% quarterly revenue growth year over year. When we check the revenue over the past years, I think it's very interesting to see that since 2014 the revenue went down a little bit. And in 2019 the revenue took a small jump. But since the Roni virus in 2020 the revenue really went up big time. So a question to ask yourself is, can QCOM grow their revenue in the same amount as they did in the past 2 years? Personally, I do think this company can grow their revenue, but probably not in the same year-over-year percentage as they did recently. On the other hand, their segments are really developing nice, and the quality they deliver is very high. Next up is the balance sheet. Right now, QCOM has 11.5 billion in total cash, and an operating cash flow at 9.2 billion, and leverage-free cash flow is sitting at 7.2 billion. In this chart, we see that free cash flow is going up and down quite a lot. I would prefer to see a bit more consistent growth here, because free cash flow is used to buy back shares, pay down debt, pay dividends, research and development. These things add a lot of value to the business and increases the stock price, of course. If we check the balance sheet again, we see that QCOM has a total debt of 15 billion. So they can pay off a big chunk of the total debt very easily, and this is something I really like. Another great thing is that QCOM bought back roughly 24% of the shares outstanding. And for me it's very important that shares outstanding are decreasing, because EPS will go up and it's more easier to sustain the dividends. And, in the end, to increase the dividends of course. So this is also comforting me a lot. And since we're talking about the dividends anyway, QCOM pays a 2.19% dividend yield at an annual payout of $3. The payout ratio is sitting at 25%, which is really nice, because they have 75% left in cash to buy back shares, pay down debt and all other things. The 5-year growth rate is sitting at 5%, which is a bit low in my opinion. I would like to see this number at least at 10%. QCOM did grow the dividends for 2 years in a row, and this is not related to the Roni virus, because in 2019 they didn't increase the dividends. The last thing I want to show to you are the fundamentals of the competitors versus QCOM. I decided to include Texas Instruments, ticker symbol TXN, AMD, Intel, Nvidia and Broadcom, ticker symbol EVGO. The first thing that catch the eye is that Nvidia is the largest company in terms of market cap. When we check the valuation, we see that there's quite some difference in PE ratio. QCOM, TXN and Intel are trading below a 20 PE ratio, which could indicate they are undervalued. All others seems overvalued based on the PE ratio. It's the same story with the price to free cash flow, except that EVGO joins the undervalued companies here. When we check the revenue growth, we see that QCOM did a great job year over year. Only AMD and Nvidia had a higher year over year growth. It's the same story with the revenue compound annual growth rate. The net income compound annual growth rate is also the highest at QCOM together with Nvidia. The leverage free cash flow is again the highest with QCOM and Nvidia. So to me, QCOM is definitely the winner here. It's pretty much the same story with the profitability. There are some competitors with a higher margin, but I think this is nothing to worry about. Return on equity, return on assets and return on total capital are the highest with QCOM, which comforts me a lot. When checking the balance sheet, we see that all companies can easily pay off their debt with the free cash flow, except for Broadcom. The last thing I want you to show are the dividends. QCOM doesn't have the highest dividend yield, but do have the lowest payout ratio. The dividend growth is better at the competitors, so in terms of dividend, I don't think QCOM is the winner here. My final conclusion is that QCOM is a really nice company with a lot of potential in the future. All segments are growing and some of them even at 50% year over year, which is very impressive. I do think they are undervalued based on the revenue growth, PE ratio, future outlook and free cash flow. but you have to keep in mind that they are not able to grow 50% each year. For now, I think I will add QCOM to my buy list, and whenever I think the moment is right, I will definitely buy QCOM stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.